What's up? What's up? What's up, struggling nation? This is your boy Unreal with Unreal Trading on the road to green. Hope so far this year you all are in the green. Let's try to beat this market. Let's try to make some money 2022. For everyone that took a loss last year, remember it wasn't a loss that you took, it was an experience. You paid for a course. You pay for training, an expensive training on my part, but it was a training overall. So this video is going to be a two-part video. I'm going to trade and show you where I'm entering my trade today and tomorrow with the two stocks that I trade, which is SPY and QQQ. As you know, I only trade those two stocks. So I'm going to make it a one video, but two parts. So today I'm going to trade either SPY or QQQ, whichever one has the highest probability set up. Remember, struggling traders, you want to look for whatever stock has the highest probability set up for you to enter a trade. One of the reasons I took a lot of L's last year was I didn't look for that. I just looked for what I thought was a good entry, which it wasn't calculated on my end. Now, as long as I go in there with a strategy, I can be profitable. So today I'm going to share with you SPY. I actually enter a trade on SPY. Today, all day, the market gapped up, first of all, from last night, yesterday at the close of the bell to today. And when I say gap up and you don't know what I'm saying, again, this goes back to you getting some kind of training so you can know the terms and understand what I mean and what other traders say when they say gap up. So when I say gap up is the stock closed at a price. Let's just say it closed at $100. And the next day the market opens and that same stock opens at $120. The gap up is that $20 difference. It gapped up from 100 to 120. So usually when you see a gap up like that, you based on what I've learned from the training courses that I took and the books that I read, usually those gaps need to be filled. So if it gaps up or down, whichever, or the market tends to want to come back and try to fill that gap before it goes back into the direction it wanted to go in the first place. In today's case, that gap didn't get filled. The market traded sideways the entire day. I missed a good setup on QQQ because I had kind of blinders on and I just kept focusing on SPY. Really wanted to enter a SPY for some reason. I just wasn't going back to do my due diligence and check QQQ. So I missed the entry on QQQ. So I stayed focused on SPY once I missed my entry on QQQ. SPY traded sideways the entire day. Sideways also called range trading. That means that the market is moving in a channel, a small tight channel, which I'll share my screen in a second and you'll see what I'm talking about. The market just moves sideways up and down in that channel the whole day till around maybe 11, 12 o'clock when it started to come out of the channel and then go back into the channel, and then it came back out of the channel. So when it came out of the channel the first time, I saw it go back into the channel and I set up a demand place for it. So I was hoping that the shares will come back, or price, let me rephrase that, price will come back into that demand area and bounce and go up. Since that's what it's been doing all day, just kind of trading in this channel, but it exited, went out of the channel, came back in to test the demand area. I caught it, went in at a price that after I saw confirmation, then I got out. I got out a little early, a little earlier than what I wanted to, but I saw price action going into a moving average, and because I saw it going into that moving average, kind of hesitate. I said, well, the way the market has been and how it was trading sideways all day in that channel, I said it might bounce down and I'll lose profit. I was up $450 going on $500 profit. I said, let me exit this trade. You'll always hear this say, if you don't take profits, somebody else will. So you have to take profits. So I said, you know what? I'm going to take this profit and go on about my business and keep studying. Took profit once price action hit that moving average. Took home around 350 profit. So not a bad day. Not a bad day. Could I have done better? Absolutely. But remember, the object of the game is to stay in green. So I stayed in green. I didn't take an L. But let me share the screen and show you what I was going through. So if you see, from when the market opened, gapped up. Gapped all the way up from the beginning of the day to day. Fast forward this a little bit. As you can see, the way the market is going inside of this channel. Range trading is what we call it, or sideways action. Really, nobody has control. The bears or the bulls, they don't have control. It's just the market is going sideways, up and down until somebody take control. Sometimes the whole day will stay like this. The market will open and close in this range, in this tight range, this tight channel. Some days it'll shoot up, or some days it'll shoot down. This is a difficult trade, a way to trade if you're not experienced. If you're not experienced and you see this, it's difficult to trade. Experienced traders can come in here and make profit on the way up and on the way down, as is inside that channel. But for new traders, you don't want to trade in this because we just don't have the experience of when to get in and when to get out on this. It moves so fast. Before you blink, you'll be losing money. So you really don't want to trade this. Reason I traded it is because it exited the channel. So as you can see, coming into 1 o'clock is where just about 2 o'clock. This is where it exits the channel. Right around 2 o'clock going into 3 o'clock. It finally exited that channel of that sideways trading and went up. Here's where it goes up. So when I saw that, I set a demand zone. If you see the gray shaded area is my demand zone. I said if the price action comes back into this gray area, this demand zone, I would enter for calls, options. If you're trading shares, you could also bought shares and then sold as well. But just letting you know, you could use the same style for both options or shares. So this is where I enter. If you see my cursor, that's where I enter. And I got out right at that second green candle where if you see the blue line or purple, for me it looks purple or blue, whatever color you want to call it. That's the 50 moving average. That's where I exited. Should have held down a little bit more, but I didn't. I thought it was going to bounce at that average, that moving average, or at the 21 average, which is the yellow line. But it didn't. Actually shot through, then it bounced back. But quick in and out trade, took profits, stayed in the green. At the end, I'll share with you so you can see my screen where I took the profit at, so you know that I'm being straight up and straightforward with you. Like I said before, straight from the hip, no chase. See y'all on part 2 of this video. What's up, struggling nation on the road to green? This is your boy Unreal with Unreal Trading, coming back at you with part 2 of the video. The first part of this video I made yesterday. I told you I would trade for 2 days to see how we could stay in the green, continue to be in the green for the rest of the year so far. And so far so good. So I've only traded twice this week due to work and distractions, I wasn't able to make more than 2 trades this week so far. So yesterday I traded, and you saw on the first part of this video, I'm cleared, I believe it was $350 in profit. Today I traded again, had a nice day, $470 in profit. Not bad. 2 days back to back in the green. It's a blessing. The first part of this video, I told you all about gaps. Sometimes the market gaps up, and I explained that on the first part of this video. So I'm not going to go too much into detail about that. If you want to know a little bit more, just rewind this part and go back and listen to that gap. So if you all can remember when I said the market gaps and always tries to retest that gap, well, I can't make this stuff up, man. I cannot make this stuff up. And it's sweet. It's sweet when you put in the work in the gym. Remember, our gym is the market, and watching and studying price action, studying candlesticks to see what the market is telling us and what is giving us. So I can't make this stuff up, y'all. It was sweet. Today was sweet. The market came down, tested that gap from yesterday, which was one of the plays that I was waiting for yesterday, which didn't happen, and I still was able to squeeze out a small profit yesterday in that sideways trading that we had. So I'm going to walk you through what I saw, where I entered, where I exited, and had I bought more options, I only bought one option contract at the time. I didn't buy more than one. So had I bought more than one, I would have held the rest of my contracts for a little bit longer to see if I'd have made a little bit more profit, just because of the way the market was going today in the early part. But being that I bought one contract, I exited right at a moving average, actually I exited at a point where I had set up. I already had the strategy calculated, and I got out. Took almost $500 profit, which was a nice day. And like I said before, once you hit your profit, or once you make profit, whether it's a loss or a green when you actually made money, don't just close your computer out and say you're done for the day. If you made your one trade for the day, continue to look at the market until the market closed. This is putting in the extra work and the extra time in the gym to get better, to see the plays develop and develop that training eye. Successful traders have a training eye. They can see the play develop, and they're able to execute their strategy just off sight. But like I said, it was a wonderful thing to see today. So I'm going to play the screen, and I'm going to show you exactly what I saw in the market today. All right. As you can see, the market gapped down and bounced at the 200 moving average where my cursor is, the orange line. They bounced. I got in right after the second candle, right at the third candle. At the bottom of the third candle is where I enter. Enter here, right at the bottom of the third candle. It's a sweet entry. Like I said, if you see all this space here, the price dropped from up here way down here, and it came in with a lot of the drop was it was a hard drop. Came in with a lot of strength down into this moving average. And like I told y'all before, the 200 MA is one of the moving averages that I watch and I keep on my chart. I try to keep my chart simple, not too much stuff on there so I don't get lost. But it just came in with a lot of strength into this moving average and bounced. When I saw the bounce, as you can tell, the bounce is from looking at the wick on the candle. It didn't close under the 200 moving average. Aside from, you have this gap from yesterday. I'm sorry, a gap from Wednesday. Today's Thursday, Wednesday, from Tuesday. This gap is from Tuesday. So the market came back to fill this gap. Dropped down, bounced, 200 moving average. Next candle did the same thing, went down to the moving average, the 200 moving average, bounced. I entered right here, right at the top of the second candle, entering into the third candle, the green candle. This was my entry. And of course, my mental stop loss, because, I keep a physical stop loss. I don't actually set a stop loss on the computer itself on my trading account. I actually like to be in control. So once it hit a price point, I exit. So my price point was half the candle. This is a pretty large candle. It's a pretty big hit if you hold it. The entire candle is your stop loss. So I went about halfway on the candle. That's where I felt comfortable, and based on strategy and what I've studied and the courses that I took, it's a good point to use as far as a point of reference, half of the candle. So I enter here, that second candle, the bottom of the second candle, as soon as it formed, I enter. And as you can see, price went up. Got this doji candle, indecisive. So I still figure like, well, it bounced at the 200 and has a potential at least to make it up to this moving average. Or my support line, it was support from yesterday because the market moved in this channel. So I had the support line right here, and I had a resistance line here. Then I had another resistance line here in the support just in case. But don't pay no mind to this middle line. Matter of fact, let me delete this. Don't pay no mind to that middle line. Had my support, had my resistance. All day yesterday, the market traded in this range all day. So I figure if it bounced at this 200 moving average, at least price would get to this here, to this resistance here from yesterday. At least this. This is where I was going to take profit. If it made it here, I was going to take profit. And if I owned more shares, I would have held at least to the moving average. But I only bought one option contract, so I wanted to secure profits. And it was a good place and a great place for me to take profit. So as you can see, came all the way up here. Bam, this is where I took profit, right here. Almost $500. But as you can see, price kept going. So I'll play it and show you another spot where I would have took profit had I bought more than one option contract. So as you can see, hit the moving average and it bounced off. Bounced off the moving average. As you can see, this would have been another spot to take profit right here. That's the 50, you got the 21, but I would have took profit as soon as price action hit the 50 moving average. That was the second spot I would have took profit at. Like I said, this I can't make this up. I can't make this up, struggling nation. The only way to green is putting in work at the gym. The only way to green is reading price action, reading candlesticks. I cannot make this up. I just spoke about it, and I hope that you all bear witness to this. I just spoke about the gap, and as you can see, gap was here. Market came in, dropped below it, and then came back and filled this gap. Came back and filled it and actually went past it. Now I'm gonna play more of what happened throughout the day. Like I said, once I make profit or if I take a loss, I don't just exit and close my computer and walk away. I watch it. So all the blue lines that you see on the screen, those lines that I'm setting up throughout the day to see if I see a play developing, whether I see a pattern setting up, something to show me where the market is going, where smart money is investing, where are they going next. So we'll let this play, and I'll show you the next spot that you could have entered as well and made profit. But because I'm under the 25K, remember I told you I only trade once because my account's under the 25K. I don't want to be restricted. I was only able to take this trade. I could have took another trade, but I prefer to wait till tomorrow and see what tomorrow gives me. I might be able to get in and get a nice return tomorrow is the hope. So let's play so you can see what I'm talking about. So let's watch the market. As you can see, it bounced here. Then it came back on my support line that I had from yesterday. Price action is bouncing there. Resistance up here, bouncing up here. Went a little bit through, but it's still holding in the same channel that it had yesterday. The same channel. Went a little bit through it. Went all the way through it. Now it came through. Let me pause it there. So when I saw this developing here, I saw it shoot under my support. It's no longer support. Price action fell under it. And it hasn't broken through my resistance. So this line is still holding. Once I saw this happening here, I said, well, this looks like it's developing into a wedge. A symmetrical triangle. That's what I saw developing here. A symmetrical triangle or possibly a wedge. So I said, let me see it. Let me watch it and see what happens. As you can see, price is trading sideways here. This is sideways trading, still within this channel from yesterday. Sideways trading. Let me pause it right there. I saw this. That's why I drew my triangle. This is my line. Bam, up here, connecting it with a price action bounced. I grabbed my lines and connected it. If you don't know how to draw support resistance lines, you don't know how to draw symmetrical triangles, wedge, bull pendant, bull flag, bearish pendant, bearish flag. If you don't know how to draw anything that I'm talking about, if you don't know what I'm talking about, it's in the books. I told you what books to read. If you want to take the studies or the classes that I took from the people that I took it from, great people. Like I said, these guys are doing amazing things. Just shoot a message out to me and I will send you their information so you can link up through them, and hopefully they're able to help you the way they've helped me. Like I said, these guys are doing amazing things. But going back to the chart, drew a symmetrical triangle, as you can see. Line 1, connected everywhere where the price action touched. And then line 2, connected everywhere the price action touched. Symmetrical triangle. Where would I take profit? Where would I enter? You're probably asking yourself. So based on study, you draw another line. From the top of the triangle to the bottom of the triangle, which is here. Here. You draw that line, and then you put that line in front of your triangle, right at the point. Whether the price action drops or price goes up. This will give you a reference of where you would take profit. Mind you, I set this line up today. This would have been another place where I would have entered, whether it went down for puts or went up for call. And as you can see, watch what the market does. Not making this up. This is a recording of exactly what happened in the market today. Not making this up. It's just so sweet to see that your hard work is paying off and you're actually seeing what these successful traders see on a day-to-day basis. Watch it play out. Look at that. Look at that drop. You would have entered here. As soon as it went out of the triangle, as soon as price broke from this symmetrical triangle on the downside, forget about this line. Could delete this line. Forget about that line. That support line. Once price action broke under that, out of the symmetrical triangle, once it broke out, you could have entered here. Or if you wanted to wait, you could have also waited for confirmation. But this is where the successful traders and the inexperienced traders like myself on the road to being successful, I would have waited here, but you could have entered here. Successful traders and experienced traders would have entered as soon as it broke. So look at my blue line. I want you to see how far price action goes where you would have took profit, and it would have been a sweet return. When I tell you as far as option contracts, it would have been a sweet return. But watch. Sideways here. Drop. Drop. The 200 moving average. It went sideways on it, just went straight through it. Look at price action. Bam. Let me see if I take it back a little bit. Well, as you can see, look at the line I got. This is a reference guide that you could use to take profit. Look at this line. I can't make this stuff up. Don't get no sweeter than this. Look where price action dropped. Bam, right there. Bam. Right there. From up here, way down here. You could have took profit as soon as it hit this target. As soon as it hit this mark right here. Or anywhere in between, you could have took profit. Bam, sweet return. Can't make this stuff up. I cannot make this stuff up, but it's sweet. As you can see, I'm only a year in, and I'm seeing these plays develop. I wasn't able to see this stuff my first year. I could see some stuff, but I was so undecisive and inexperienced that I didn't trust that it was actually happening. It was one of those things where you say it's too good to be true. Well, man, the pudding is in the cake, man. It's real. And I hope you follow my experience. I hope you like the video. I hope y'all subscribe. I hope that you all are putting in your work, because remember, I try to point this out as much as possible. Life is a ticking time clock. Eventually, it's gonna tick out. It's gonna punch you. Our clock is gonna punch out eventually for all of us. But try to take advantage of as much as you can of the time that you do have available. Turn the TV off. Just put the unnecessary stuff away and focus and dedicate to this thing, because it could take your life and it could be just life-changing, unreal life-changing. Follow me through this journey on the road, like I said, from struggling trader on the road to green. Follow me on this journey. Hopefully you all are taking some of my advice. Hope it helps. I'm not a financial advisor. I'm not a financial planner. I don't have no financial degrees. I just jumped out there and decided to try something new. Going to work and punching the clock is just not for me. It's never been for me, but I got complacent for the last 18 years. I'm trying to get back on this grind, and the grind is being financially independent and being your own boss. That's the whole purpose of this. So if you want to be your own boss, this is the road. I'm letting you see my experience, my struggles. So when you actually see a video, it's no $1 million cars, no $1 million houses, none of that. It's just raw as it gets. The car you see at the beginning of the video, that was bought off a 9-to-5 salary. Wasn't bought off contracts, wasn't bought off day trading, wasn't bought off options. It was bought off a 9-to-5 salary. The house that I'm in, 9-to-5 salary. So walk with me through this journey. You'll get there just like I would get there. Don't give up on yourself. The only person that can fail and the only person that you can allow to fail is yourself. You gotta look in the mirror. Don't allow yourself to fail. So on the road to green, this is Unreal. Signing out. Like, subscribe. See y'all in the next video.